Hey, it's Mack with PriceActionTradingSystem.com, and it's Thursday. It's January 15th. This will be our chart lesson for today. Really similar day as to yesterday, kind of a larger range day. Looks like there's a possible two-tiered channel working here. We finally have a break of it. If so, we actually had a break here um, as well, and we've got a new low in. It looks like we're trying to work higher now. It's hard to say if this channel is valid. The lines are definitely, prices are definitely playing off the lines, so you can't ignore them. And they do originate right up here off the first two swings, the two high swings after the regular session open. You might even be able to tie these in. I didn't play with it a whole lot. You might even be able to tie it in up here higher, but I still think you come to almost the same conclusion. So not much difference. I really felt like this downtrend originated right here. It was more rangy looking, and then it's been steady downtrend. Then we've had some bounces and some moves up, but again, it's very similar looking to yesterday. Will we rally into the close and do like we did yesterday? I don't know, but generally, when you see a pattern and it acts one way, it'll do something similar next. And you can see it looks real similar. Sell-off was a little steeper, and then we rallied into from about lunchtime on. Obviously, well, we started rallying about the same time, so we'll see if we continue higher here. It looks like I haven't drawn anything the last 30 minutes or so, but it looks like there's probably some kind of channel working higher here. You can see that fits pretty nicely there. We'll see we'll just watch it while we're doing the rest of the video. But if you get these shorter term trend lines and you draw them right, it's really hard to mess it up. Um, I mean, everything's really acted fairly standard, and a lot of times they don't fit on one side, so I just switch them over to the other, and they tend to, and you find your lines, and then you move them back, and they tend to fit. And you can see that right there. If you could have got that off those first couple of swings and drug it up, and it fits pretty good. Then you got your big overshoot right here, so that's your sign that um, you may get a break of this trend line. And you'll see that a lot. I've seen that a lot lately. Here's another example where we're moving up and we eventually go through. And again, that's another sign that it reverses. I thought maybe it might be a two-tiered channel, but you can see we never got there. But that's how I'll do it. I'll just get an equal distance, move it over there, and we'll see if it comes into play. It doesn't in this case. All that indicated was a reversal, and we reversed. And you actually had some breaks down here. Didn't really come into play. But again, the reason I didn't use these first couple of swings here for my trend line was because it didn't fit off the top. And I drew it off this upper side first, and you can see that's obviously um, it continued to work perfectly later on, and I drug it down, and so that led me to believe we had the break lower, and of course we end up giving an overshoot that's about an equal distance. And I really thought we'd have two tiers here, but we didn't. It just reversed and took off. And but that's how it works, and that's how we find these lines. Sometimes when it's not real clear on one side, just work off the other side. And you can see that I did that right here, and we had the overshoot, and then we tried to get a new low, and we never could get it. And that may be a good sign that we're going to rally the rest of the day, or we may come back and still work on that new low. We had a break of this one here at a new low, and then we had a little short-term correction, then we just went lower again. And but I think that's because there may be a larger channel in play here. So, and there's definitely a range in play, but we haven't bounced off this low of the range. We've tried, and I tried to get long with it a few times, and they all worked, but none of them got you that big, huge move that just keeps going. And we may not get it today, so we'll just have to see. But I'm going to back out, make the chart a little bigger where it's easier to see the trades, and we'll talk about what I saw. And it's only about 2:10, so there's still a little time left in the day, but man, there's been so many good trades. You just, if you've been trading since 7 a.m., you ought to be done by now, unless you're just trying to, pad your pocket a little bit more than you normally do or something. So, but when I came in, we were trending up. We had a break just right prior to me coming in, and you just sit here and you be patient, and you're hoping for a retest. Now this does look real rangy, and I had a range drawn here, thinking this might be the midpoint, and we may go higher here, but you're looking for prices to come back and test this high and hopefully make a new high, because that's generally what happens. Sometimes on a range day you can't get there, and that might have looked like the case here. It wouldn't have mattered. You still would have scalped out of this prior to that last move up, and I didn't mark that because it's really scary to go long right into strong resistance. But this was the area that you're really looking at this point, because we already got through that area once, so we might get through it again. But when it hesitated here again, you got to be real careful going long into that. So, uh, and another thing, notice that was the um, close of yesterday and the open for yesterday. That same price. That's really interesting. If you travel all the way across there, you can see this is supposed to, I believe the yellow is supposed to be the open. So I guess you'd call that the open of yesterday, of today, but that's where it closed as well. So yeah, that's right. But notice how that came into play all day long and still coming into play. Those areas turn out to be, that's why I have that on there. They turn out to be interesting areas. There's other ways to find them, but that helps people that are new at it. Put your current day open, high, and close, and your previous day open, high, low, and close, and pay close attention to them. And you can see here was the previous day's open, and it came into play again a couple of times as well. And the green line was yesterday's high, and notice how it came into play as well. So they're important areas. But anyway, let's get back to the trades. We were working up. We had a break. We tried to go lower once. We failed. We tried to go lower twice. That's a failed second entry short. It went low first. Just have your stop right there. Easy scalp. You probably didn't get any runners if you, depending on how you played your runners, probably didn't get any. But if you did, you got a nice run out of it. And you got a new high, and then you started correcting. And notice we had a little channel working down here. We actually had a little close, maybe outside of it. Depends on how you draw it. I think it's more like that, a little bit of a close, move to a new low. But the important thing is you got a new low here. First entry pullback, failed second entry short, a nice bearish or bullish type reversal bar. Just go long there. I didn't like it to the short side because we'd been working up, and the bias was still slightly up, even though we had a new high here. A lot of times you'll get two legs, and we bounced right off of what was resistance, and it acted as support. So when we try to go lower twice and it fails, you got to pay attention to that. And so nice long there. And if you did go short, you just have to reverse if you didn't scalp out on your short. But really, I like it to the long side. And you had this little movement going up, even though it's more sideways. It's just a nice trap, and it goes up. And it's really scary to go short on a move like that. We did have the break in the new high, but when we got that little inside bearish bar, I really liked it if it broke lower than that to at least come back to the EMA and get another push up. But it just shot through there. There's that clue, it shoots straight through, and that's what generally starts the big sell-offs. And you can see how that just rocketed. I mean, it's like it wasn't even there. That's telling you something. And then you get a little. And this is like a little two-legged pullback, but look how bearish that bar is. Just go short right there. And you're looking for, starting off, you're looking for that measured move. So you want a target of here at a minimum. You can see we got right there. We tried to bounce, and then you get another, it's like a little two-legged correction. It almost looks very similar to this one. It's a little bigger pattern, but it's kind of a repeat, and broke higher and then turns and goes down. I like to just right off the EMA, right off the midline, just go short there. And then it pulls back and you get another second entry long, and look at that big bearish bar. Boom, it falls straight down. Once you got down in here near the support again, I didn't like going short anymore. That one was really tempting, but if you're paying attention, you know that there's some support across there, and you can see where we bounced across that line multiple times. So you got to be careful going short into that. And then we actually go higher, and you get a second entry short right here. But again, I didn't like it because now we're kind of trending up. Um, I kind of kicked myself at first when it turned down, but when it made this next little trap and turned up, I knew that I was probably reading it right, and they were going to trap some people first. And that was a nice move up right there. And then you get another, you got a new low there, so that's a first entry short there, pull back. Let me move that so it's easier to see. Notice that new low, pull back first entry, pull back second entry. It fails, it traps people. Those have been, and it's right off the original trend line that I was looking at. If you drew this off here and drug it down, and then we get another bounce. This is the first entry, but you know, you figure we're coming back to here, maybe to here, and maybe to the very high. So just stay with it. There were some breaks here, leading you to believe that we could get a reversal. But when it bounces right off that line on high volatility, big movement days like we've had lately, you can see what happens. It's a quick, easy move. And so the fact that it's right off that trend line, it's just hard to ignore that. And then, of course, we get up here, and this just turns out to be an overshoot. This is not really valid. I had it there just in case it went on, but it didn't. So this turns out to be an overshoot, and then it sails off. And you can see it going down. And I wasn't ready to give up on the up move until we got the failed second entry long. And this actually should be this bar that's circled. It's not real clear there, but let me just move it. Notice the new high pullback, pulls back right there. There's actually a little two-legged, there's actually a second entry short right there. But that's so close to the EMA that I think it's a little bit concerning to go short just yet. So I think you're better off to wait on the failed second entry long, which comes right there, and it turns straight down and goes out the low side. Just go short when it goes out the low side of that bar. And it didn't take off. It pulled back one more time and then rocketed down. So you really could have added on, or if you missed this first entry, jumped in right here, and it just drops on down. So it keeps going for a couple more moves. But it finally bounces, and it's too late here to enter, in my opinion. They are coming right off the EMA, and you know how these moves have been. So if you want to, you know, you might consider this one, but it's a doji, and then you really like this setup bar, but it's so close to the low, you don't have a lot of room. So you're better off just to wait, and you'll get a good entry again in a little bit. And that's what I'm always preaching, is being patient and not chasing the market, and not making a dumb mistake. But then you finally get a new low, a pullback first entry, pullback a second entry, and that's not the best signal bar, but it's the first pullback to the trend line off the EMA. You know you're going to at least test this low, and it's probably going down here, and that's exactly what happens. For a minute, I thought we were going to keep going, but we did get a break here at a new low, so it didn't surprise me either that it bounced. It looked like they were going to try to reverse it out of there, but they just couldn't do it. And so I don't see any other entries in here. It's really tempting to go short there, but I think you got to wait to make sure we're not going higher. It does look like a reversal pattern, a failed break higher and a new high that goes right through the EMA. But if you went long right there when it started getting hung up, just take what it'll give you. You could get a tick out of that, or maybe even two a couple of times. But when it starts to get stuck there, that's not a good sign. This thing should have gone on. So just take what it'll give you. Get your tick, get your couple of ticks, and at the very least, get out at break even. And just wait and see what happens. I do that myself sometimes if I get caught in the wrong spot, you know, and I get a chance to take a tick after a couple of dojis or something, I'll take it. You know, don't gamble because it should have taken on off. And notice the first entry, you got a new high, pull back first entry, pull back. And by the time the second entry comes, you got 1, 2, 3, 4, 5 bars all stacked up there. Dojis, stems on both sides. That's a sure, and look how flat the EMA is getting. That's a sure sign that you're in a little congestion, which is just a small trading range. And somebody asked me about what I mean by bars stacked up side by side. I don't mean that their highs and lows are exactly matching, but the majority of the bar is overlapping each other. Notice how in a good trend the bars are moving down, and you get some overlap, but most bars make a lower high and a lower low, all down through here. That's not happening here. You're just kind of going up and down, up and down, up and down, and they're kind of side by side. So that's what I mean. And then finally, you get a little failed breakout to the upside in that big bearish bar. You probably want to wait on this bar and go short, and maybe even use a limit order, a tick in or a tick back. And you really might even wait for the breakout pullback short, which comes here. But by that time, you've bounced here again, and it's a little scary going short into that strong support. So I like this one better because you figure you're coming down here to test that again, and you may get a bounce, but you got plenty of room. Here you don't have much room from your entry to the strong support. And you might have even moved that down a little by that point. You still don't have much room in there. Notice how it gets hung up. It does end up going lower. And that's what you got to wait on the breakout. Notice how it went a little lower pullback. That's a breakout pullback short. And it takes on off, and you just keep moving. And you might have even been thinking for this first big move here, a measure leg. This is one time we don't get it. Notice this. It just came up short. But it's obvious once this channel never really gets another break, and this one doesn't hold either, and it goes higher. So you know it's time to give up on it. But then you do make a low, pull back first entry, pull back second entry, and you did have this overshoot here, and you got a new low in place as well. So you got to be real careful going short. But before it actually triggers, you get 2 or 3 bars stacked up there, and that's not a good sign. And when it breaks lower and turns and goes up, you know you got them trapped on a failed. Notice the new low, first entry, pull back second entry. So you got a failed second entry low there. Just take that to the long side. We didn't catch the bottom and get a big move up, but you still got an easy scalp and maybe a little more. And then it starts working down, then it starts working up. And it's really, look how flat it is. Look how flat the EMA is here. So you got to be real careful. This support resistance line here, it's uncertain. It's not really doing either one. We are making higher lows here, and notice this new low. This swing low was lower than this one, so it counted over. That's a first entry short. Pull back a second entry with that big bearish bar. And when it failed, I liked it to the long side. Once I entered, you just barely got out of that one, and it's coming back down again. And then you get another little failed second entry short. And by this time, I was really starting to question this thing. But again, if you drew this line off these first couple of bars right here, when it came back down, it fit nicely. You can see that. And that's why I like that one. And of course, it turned out to be right. But that's all. Every trade is just a calculated risk. And we want the odds to be in our favor. Simple as that. But notice this low. This low is higher than that one. This one's higher than that one. This one's higher than that one. And there's really a bunch of matching lows. That was another reason I like this one. I'd kind of move this line down a little bit by that time. And then you kind of see what's going on there. There's some strong support there, and it's holding. And so that's another reason to like that, at least back up to here. And there's enough room. So you can only, and this is kind of, even though this is an uptrend, it's kind of flat, but it is starting to trend up again until here. Now we're trending down again. So, but those are the kind of things you look for. And I went back and forth whether or not to make these two green. But I think if you see the support there and you notice the higher lows and what's going on there, that I think you just about want to take that trade. That's that little trap. That's what you're looking for. You kind of want to see it right here. It was really tempting to enter long here because you're trying to catch that little failed break lower that leads to a huge rally. And we may not get it today because we're really struggling to go higher, even though we're not really going a whole lot lower. We're struggling to go higher. But it wouldn't surprise me if before this day is over, we don't catch some people on a trap here and this thing rocket up. But for now, um, maybe this channel that I have working down is correct, and we got the break, and we're not going to quit till we get a new low. So we'll just have to see. But draw those shorter term trend lines, because that's what helps you to know if if everything's played out. Notice that little short term trend line. We do have a break here now. We don't have a new low, but this support may keep you from getting it. But there is a little channel there, and there's a break now. And you can clear it. Notice the little overshoot first, and then you get a break. And we'll see what happens here. But that's how that's why I draw these short-term trend lines, and they will help keep you on the right side of the market. So don't be afraid to use them. Definitely use them, because they come in very handy. So, but again, if you back out, you can see there's clearly, I guess you would say there's clearly a downward bias, because even the big rally that we had early sold right back off, and it didn't rally back to the very highs. It found a lower high, um, and it was right there off that trend line off the first two swings. So there's some different things to look at here, but the trading has been great lately, and I've seen some comments. Some people have asked, it's hard to to follow the 2-point stop rule right now, and it can be with some of these larger bars. And I'll be honest with you, when it's moving really well, I don't pay much attention to it, because if you hit the trades right, they rarely is your stop going to even be in question. But if you're not as good at picking the entries, and and you get a lot of close calls, or you do get stopped out, it hurts if you're not following the 2-point rule. And if you can't get above where you need to be on the 2-point rule, then you're putting some more risk to the trade. But there's a couple of different things you can do. You can either go with a larger stop and try to get a bigger target, which is really not as hard to do as it may sound, because look how big a lot of these moves are. And, just one little leg there, and it might be 4 or 5 points. So it's easier to get a bigger move than normal. So that's one option. The other option is to go to a slightly bigger chart. Occasionally I'll go to if it gets really difficult and starts whipsawing a lot, and you got a lot of volume and volatility, I may go to a 4,000 or 5,000 tick chart and trade it instead. So there's some other options. There's also the ability to sneak in with a limit order, wait on your trigger, and drop your limit order back up into the signal bar, or down into the signal bar, depending on direction, far enough that you get within the 2-point rule, and see if it'll come back and fill. The only danger to that situation is you're going to miss some good trades, and it's going to fluster you and make you mad. And you're going to think, man, I should have just done it. I should have just risked it and put my order in there. And then the next time you'll risk it, and it won't work out that way. So it can lead to other problems. So you got to be careful doing that. But regardless, those are some options you got. And also, I never talked about it. I talked about a couple of the measured moves, but there was your first leg down today. And so you're looking for a measured move off that. And notice how close we got right there, within a tick or two, maybe 2 ticks, maybe 3 there, because this is backed way out. But that would help keep you in this trade, working the rest of the way down here. And so remember those measured moves. I show those from time to time, but every now and then I forget to point one out. And that was another thing working when we worked up originally here. You got one leg right there. And so when this leg headed up, you're kind of looking for a measured move. And look at that, to the tick, exactly. Perfect measured move. And so when we went back up, I was considering maybe another measured move, and that would have gotten us back up to the high, but it didn't. We got close, but we didn't get there. And that was one thing that led me to stay with this entry here on the way up, and that was another reason that made this entry a little bit more nerve-wracking, probably a little bit more of a high risk trade. The only thing that I did like about this one was it's a lower high than this one. There's a double top there, so that's a lower double top. Um, we're also way away from the EMA, and the prices just do not stay away from the EMA very long unless there's a huge trend. And notice we've been coming back pretty regularly here, and we'd already had a big move away. So the odds were we were going to come back and test that even if we went higher. So that was, there's all this stuff is really confusing until you get used to looking for all of it. As you do it more every day and you get used to it every day, it starts to become second nature. And so this stuff doesn't come together overnight. So if you're not seeing all this stuff, or all this stuff sounds a little confusing, just keep working on it. Get each, somebody else sent me an email today and they were asking about, and I get this question a lot is, show me the losing trades, not just the winning trades. Well, the thing is, the price action is never wrong. So there are no failed good trades. If there's a trade where there's a trap that it might trap a lot of people, I'll usually talk about that. But the price action is never wrong. When we have a failed entry, it's because we either read it wrong, we were too early, we were too late, we were just reading in the whole price action wrong, or we got fooled and got trapped. That's the only reason. That's when trades fail. But the price action is never wrong. So I hope that makes sense. So if there's a trade that you got trapped on or lost on that you just cannot figure out, send me a snapshot of it, pointing out exactly where you entered, and give me the details, and I'll tell you what I see. And I'll tell you the things that might be there that could be a hint to skip that trade, or that trade might be going to fail. Or I'll point out to you how you read it wrong, or just whatever I see, I will point it out to you. And sometimes there's some trades that, everybody gets fooled, but the price action's never wrong. So, and I don't show wrong trades because they might only be, what's wrong for me might not be wrong. You may not have misread, and vice versa. So the idea with these chart lessons is to show you the good setup so you can study the chart and figure it out. And the way you get better is not for me to point out that, hey, you shouldn't have taken this trade right here, because I don't know if you took it or not, or who took it or who didn't take it. The idea is to show you the ones that are the good setups so you can study them and learn to see them yourself. But the way you get better really is to study your own trades as well. And wherever you had a failing trade, study that consistently to figure out what you missed, because you missed something. Because the price action is never wrong. You missed something if you had a failure. You were either too early, you were too late, you didn't have the trend right, you were counter trend trading. There's something you missed. So that's what you need to figure out. And as you study your bad trades every day, and then study and try to find the good trades, you get better at this. But let me point out something to you here. Notice where every one of the big moves generate from. The trend line, they really generate from the important support and resistance areas, which are the trend lines, the 21 EMA, the midlines, and then just the flat horizontal strong support and resistance areas. That's where all the best trades generate from. And if you study this chart, you'll see that. And before I learned all this stuff and figured it out, I used to wonder why prices would hit a certain spot, be selling off like crazy, hit a certain spot, and then next thing you know, rallying 20 points in the other direction. And there's a reason. So you got to figure that reason out. Everything, anybody tells you the market's a random walk, don't believe it. It's not. Overall, nobody knows exactly where the market's going, but short term, you can predict where it's going, and you can read what's going on, and you can understand when it's not doing that anymore and is reversed and doing something different. So there's a reason that all this stuff happens. The reason prices turned down here was there's horizontal support and resistance. There's a trend line right there. It was an area that prices were likely to test again because it was the previous high of the day. It was also the current open for the day, or current open for the day. And if you don't know that, or you're not paying attention to that, you don't understand why prices came back and tested that area. So All this is good stuff, and it can be learned. So, but we're getting into 30 minutes today. I'm going to wrap it up. I hope you had a good trading day. We'll be back to do it again tomorrow on Friday and wrap our week up. But I'm done for today, and I'm out of here. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.